Pan-African Business and Economic Focus, the 5th of July 2026. Africa's leading development finance institutions are intensifying calls for the continent to move beyond exporting raw materials and instead build stronger manufacturing and industrial capacity. Speaking at a mid-year media briefing in Abuja, Afreximbank President Dr. George Alombi said Africa's long-term economic future depends on processing more of its own natural resources rather than exporting them in raw form and importing finished products. He noted that Afreximbank's balance sheet assets and contingencies have grown to $49.4 billion United States dollars, supported by a capital adequacy ratio of 23%, providing the financial strength needed to support industrial development across the continent. Afreximbank is also expanding its investment partnerships through the Fund for Export Development in Africa, FEDA, to accelerate the development of special economic zones. Dr. Alombi urged international lenders to adopt a more balanced approach to assessing investment risk in Africa, arguing that the cost of capital should better reflect the continent's long-term growth potential rather than outdated perceptions. The African Development Bank is also encouraging governments to adopt a more coordinated approach to development finance. Following the release of its 2026 African Economic Outlook, the bank is calling on finance ministries to move away from fragmented national funding strategies and instead work together to mobilize larger pools of capital capable of supporting regional growth while strengthening resilience against global trade and economic uncertainty. Regional integration continues to gather momentum. In Arusha, Tanzania, transport and trade ministers from across Eastern Africa concluded discussions on a roadmap to implement a multilateral air service agreement. The initiative is expected to liberalize regional air travel, reduce the cost of cross-border aviation and support the continued rollout of the single African air transport market ahead of its scheduled continental review in 2027. At the same time, African central banks are expanding the use of the Pan-African Payment and Settlement System, or PAPSS. The platform enables businesses to settle cross-border transactions directly in their local currencies, reducing reliance on the US dollar and euro for intra-African trade. The system is expected to lower transaction costs, speed up payments and further support trade under the African Continental Free Trade Area.